Quick video to talk about why even the best traders can fail prop firm challenges. A lot of people will see someone online, or maybe you've actually done it yourself. You have started trading with a prop firm and you take a few trades, you're going into a drawdown and you end up losing the account, but you don't feel like you've done anything wrong. What could the reason for this be? Well, there are obviously numerous reasons. Reason number one could be that your strategy isn't profitable. And this could obviously be a valid reason. And a lot of people go into prop firms when they're not ready to do it. They don't have a strategy that's well tested in multiple different market conditions. And they kind of rush into prop firms because they're trying to make these large amounts of profit they see other people making. It's more of like a FOMO thing. So they want to make the profit that other people are making with prop firms. So they rush in to try and pass challenges, but their strategy is not ready. Their psychology isn't ready. So they can't actually pass. That's reason number one. Reason number two, and kind of the purpose of this video, you could hit a losing streak as soon as you buy the challenge. So let's put this into perspective. Obviously, a strategy and your trading will have an equity graph. So you have the graph going up, you might have a few dips. It's never a straight line. It's like a mountain. There's peaks, gullies, whatever. I'm not a mountaineer. That might be incorrect, so I apologize. But you know what I'm on about. The little valleys. So let's say you buy a prop firm challenge. Who's to say that when you buy that challenge, it's going to be before you hit a winning streak? I don't know anyone that can guarantee that's going to happen. So statistically speaking, you could hit a losing streak and you could blow the account. A normal strategy, let's say it has 50% win rate. Over 100 trades, you're going to lose 50 trades. Obviously, there's not a high chance that all of those 50 come at once, but let's say 10 of those could come in a row. 10 of the losses could come at one time. So if you're risking 1% on a prop firm challenge, you buy the challenge just after a winning streak, so your confidence is at an all-time high. Let's just make this a perfect example. You've been trading on your personal account. The past few months have been really, really good. You're making 4 or 5% a month profit. You think, okay, guys, I think I'm ready. I'm going to take a prop firm challenge. So your equity graph's looking nice. It's very, very positive. It's going to the upside. It's a very bullish equity graph, and you're looking to take a prop firm challenge because you think you're ready. So you buy the challenge, you get the account details. You're going to start fresh on Monday. First trade, loss. Obviously, you think, okay, first trade loss, it's okay. I can't win all the time. Second trade loss. Okay, small little losing streak. Third trade loss. Fourth trade loss. Fifth trade loss. And a lot of people will be like, oh, well, I don't usually lose that many trades in a row. But you can only know that if you have the data to back it up. A lot of traders don't know how many trades they could potentially lose in a row. We never know what's going to happen in the future. Obviously, we can have a good idea of what's going to happen just based off of the averages from our previous data. But you will never truly know until you enter the trades. So that trader could then lose 9 or 10 trades in a row and blow the account. Does it mean they're a bad trader? Nope. Does it mean they weren't ready for a prop firm? Nope. Was it just unlucky timing in their strategy's equity graph? It could well be. A lot of traders see it as a bad thing that they fail a challenge or they blow a funded account. But the way I see it is the ROI of prop firms is incredible. If you fail 5 and you get 1 payout on the 6th account, you can be profitable. If you fail 10 and get 1 payout, you could be profitable. The ROI is very, very incredible, but there are going to be times where you hit losing streaks. There are going to be times where you're not winning every time, and because of the strict rules on these prop firm accounts, you're blowing the account. But the main issue people have is it disheartens them. Or maybe they see someone that failed online as a bad trader because they've actually failed a challenge or they've blown a funded account. But if you actually think about it, On a normal trading account, you have 100% balance, 100% equity. And you can trade 100% of that money. And if that goes down to 90% in drawdown, you can still trade that remaining 10%, and you could get that up to 100% again. Obviously, it's not likely that you're going to do so, but it is possible. Whereas with a prop firm, you have 100% balance, but you're only allowed to trade with 10% of that. And if you lose 10% of that, it's gone. You haven't actually blown the account. You've just gone into a little bit of drawdown, but they obviously limit your drawdown. So you haven't blown an account. It doesn't mean your strategy's bad. It's just unfortunate timing, and it's inevitable that you're going to hit a losing streak eventually. And if that losing streak is large enough, or maybe you have some slippage too, or you add on the commissions, it can quite easily add up to 10% of losses. So for the traders watching this that maybe were disheartened that they had a profitable strategy, they fully tested it, they traded it on personal accounts, but then they take it onto a funded account and then they actually lose, just think that it could have just been the case where you took it at the wrong time. You took it during your losing streak or during the start of your losing streak, and you need to make sure you know that this is entirely possible. There are going to be a lot of factors. It could have been the case that because you started the challenge, it led you to make emotional decisions and you didn't trade exactly to the plan, which as a result would have meant that it would have fueled the losses. So the losses would have been kind of there for a reason because you didn't trade exactly to the plan. And this is the case for a lot of people, but you just have to know that if you're journaling your trades and you know that you haven't done anything wrong, it can still happen. But because of the ROI of prop firms, the ROI, which I previously mentioned, it's okay. Let's say that £500 you actually spent on the prop firm challenge, you lost it, you don't get that money back. It's not the end of the world, but you just need to think, if you buy another one and pass and get a payout, you've only spent £500 total then to get a prop firm payout. Whereas if you put £500 into a personal trading account and try to trade that and make the same returns that you could potentially make on a prop firm account, it's going to be very, very, very difficult. You're going to have to make thousands of % profit to make the same returns. Within a few weeks of trading, that is not possible. Well, obviously it's possible, but is it likely? Absolutely not. So you need to make sure that you're trading the plan, you're realizing the potential with prop firms, and you're making the most of them. There's no point going in saying, oh, I failed one, prop firms are a scam, I can't pass them, my strategy's not good enough. Even now with the prop firms allowing no time limit, it can be a lot easier to pass even with a strategy that doesn't make 10% in a month. Or maybe you want to risk 0.5%, so it allows you 20 trades to pass, or 20 potential losing trades to blow the account. This can also be done. You just need to understand your strategy, understand your losing streaks, understand your winning streaks, and then you can be ready to pass and hopefully get some payouts from prop firms.